Hi. I know that in the United States right now, the news is filled with tax reform. There isn't a whole lot of stock market news, even good news, that seems to be getting through to the mainstream media, despite how good some of the news happens to be. Today, three American companies that are probably going to benefit greatly from the corporate tax reform, reported earnings. Let's take a look at those earnings. I'm Cody from Wall Street Breakdown. This morning, Darden Restaurants, that's the home of the Olive Garden and Longhorn Steakhouse, as well as a bunch of other restaurants, and it's making me quite hungry just thinking about it, reported earnings of 73 cents a share. That beat the street's estimate by 3 cents. Revenues of $1.88 billion beat the street by 30 million. Now that revenue number year over year is up 14.6%. That is a relatively large gain year over year, but as we've seen in the previous quarters, Darden Restaurants seems to be growing at a pretty decent clip, despite the fact a few years ago, things weren't going near as well. Same store sales for Darden Restaurants are up 3.1%, and that clobbers the estimates of only 1.6%. At Longhorn Steakhouse, same-store sales are up 3.8%, and at the Olive Garden, probably the biggest brand for Darden, it's up 3%. So seeing same-store sale growth at that kind of a number for the major two chains under the Darden restaurant umbrella is definitely a good sign. They raised EPS guidance by about 10 cents above consensus going forward, which I think everybody really liked. Darden closed the day at $96.69 a share. That was up 6.79% on the day. Quite a big gain, but a very good earnings call. And as we go ahead with these earnings calls, I'd just like to point out that this is three totally separate sectors that don't really touch on each other whatsoever. So when you see the restaurant business up and then these following two companies, and they're all very, very entrenched in the United States. While a couple of them are fairly global companies, they're all United States-based companies. It just goes to reaffirm that tax reform that's going to help these companies even more, and these companies doing this well because of the economy, only bodes well for the future. Now for Darden Restaurants, their price to earnings is a little over 23. So that number has to keep you fairly trepidatious if you're thinking about investing in Darden, and they're definitely trading around the 52-week high. But still, very good earnings from the Olive Garden parent company, Darden Restaurants. I am starving for some pasta. Moving on, in the after hours, earnings came out from where do you think semiconductors are built? You know, those guys that make DRAM and NAND flash memory. Where do you think? That sounds like somewhere, Japan, right? No, the home of Micron Technology is firmly established in Boise, Idaho, where you get your potatoes and then you get some DRAM. That sounds like it, right? But Micron killing it on this earnings call. EPS of $2.45 a share beat the street estimate by 25 cents. Revenues of $6.8 billion out of Boise, Idaho, selling DRAM, beat the street estimate by 410 million, and that revenue number up 71.3% year over year. Definitely not slacking. In the sales department, I think we all know that the semiconductor business around the world has been up substantially. We've seen it with Broadcom, that they've been knocking it out of the park, right? Everybody that's in the semiconductor industry basically is on back order for a long period of time because DRAM and NAND flash memory is under such high demand right now, but these companies are benefiting from it. This company based in the United States, I'm sure there's a lot of people that have been invested in Micron Technologies before. If you're still invested in it, you definitely have to enjoy seeing an earnings call like this. Quarter two guidance for EPS and revs are well ahead of the consensus. DRAM guidance for the industry as a whole, Micron said, was going to go up about 20% next year. They said they find themselves maybe a little bit under that number in the following year. NAND flash memory, though, they're thinking the industry is going to go up about 50%. That's a significant bump. We all know it's going up, but 50%. And they find themselves actually being slightly above that number. So that's going to be good growth even on the horizon. Their debt number, though, is only $1.2 billion, and cash and equivalents are about 4 times that. So Micron is not only selling a lot of stuff, but they're running a really tight ship as far as how much they owe to how much money they've got in-house. The price to earnings is just over 10, which is cheap. That is cheap, cheap, cheap. Semiconductor industry growing substantially. If you're thinking about doing any investing, though, I would definitely remind you, speak to a licensed professional financial advisor. Don't be taking advice from a guy wearing a hat and sunglasses in the house. What is it, gonna rain? Maybe rain some of that pasta we were talking about. But other than that, it is not gonna rain. Please speak to your licensed professional financial advisor. Micron closed the day at $43.98. Okay, they were up only 0.61%, but remember, they reported in the after hours, and in the after hours, they are up over 5%, putting them well above their 52-week high as well. It seems like every company is trading above their 52-week high at this point in time, except for maybe GNC. And in our last earnings call, FedEx, the guys that are bringing you all your fantastic packages for your kids or for yourself or for your loved ones here at Christmas time, reported earnings $3.18, beat the street by 29 cents. Revenue of $16.3 billion, beat the street by $620 million, and that number for revenue is up 9.2% year over year. Let's take a little stop and remind ourselves that Darden, Micron, and FedEx all beat consensus estimates on EPS and revenues and had significant revenue gains year over year, just as an aside to these fantastic earnings. So with FedEx their adjusted operating margin improved by about 30 basis points, bringing it to 8.5%. They raised guidance on EPS, which is well above consensus now. They closed the day at $242.54 a share. It was only up 0.26 going into the earnings call, but up another 1.36% in the after hours, again reaching their 52-week high. Everybody trading at the 52-week high or above after great earnings calls. FedEx's price to earnings about 22.8. So if you're going to do any investing, I would definitely recommend that you speak to a licensed professional financial advisor. But it's good to see the restaurant industry, the shipping industry, and the semiconductor industry, which we know for a fact is on its way up and is considerably blowing through benchmarks one after another. These are great earnings calls. I would hate to think that they fall on deaf ears just because a bunch of tax reform out there is taking all their attention, while the tax reform, I think, is going to be a definite good move for the United States and their economy. Earnings like this shouldn't go unnoticed. I'm Cody from Wall Street Breakdown. If you haven't already, click the subscribe button, click the notification bell. Thumbs up for this video, all videos, thumbs up for 3 solid companies in 3 different sectors doing phenomenally on their earnings calls. That's how you diversify yourself. There's no doubt about that. And comments, leave us some comments. We love hearing from you. We want to know what you think about this, and feel free to let me know when and where you're going to be taking me out for that pasta at Olive Garden. Have yourselves an outstanding rest of your Tuesday.